Thank you for joining us Tuesday morning at 10 o'clock. And we are super excited because I think what we're going to do is spend the next hour of simply being a service. I've got three amazing founders who, over literally the last year to 2 years, have taken an idea and gone through a round and successfully fundraised at their business. That includes non-dilutive, friends and family, and dilutive VC funding. So a little bit about myself. I currently work as a managing partner and fractional CFO for AVL Growth Partners. AVL Growth Partners is a full stack accounting firm. And so we offer services at a fractional rate for a senior accountant, controller, and then there's a strategic CFO. My background, when I really think about the kind of big four highlights in my career that has really driven a lot of what I know today. Like you, I have a successful exit. When I was 28, 29 years old, I mortgaged my house to buy a high-end game hobby store from a owner that was looking to retire. I took that location, scaled it into 3 locations in 3 years, built out a warehouse, and then sold that. And that was my successful exit. And what I ended up doing during those 3 years of owning that business is I wrote a monthly column for the Wall Street Journal called Entrepreneur's Diary. And that column that ran every month in the Wall Street Journal essentially showed my experience in terms of being that first-time founder. And what I learned from that experience is the more vulnerable I was, the more open and transparent about my own entrepreneurial journey, the more feedback I got from others saying, I'm going through the same thing. And that's when it really clicked on me that we're not alone. We all go through the same steps. We go through the same trials, the tribulations, and the ups and downs. I had then sold that business. I worked for a public company for 6 years as they looked to launch a direct-to-consumer subscription model. I came on board as the 5th employee, and we scaled that from 2 to 42 million in 6 years. And so I got a deep understanding in 6 years of what kind of customer acquisition, subscription model KPIs, and what scale really looked like from going from 2 to 42 million. That was sold to a private equity firm. And then I spent almost 2019 traveling internationally as a company in Milan went through a SPAC. And we completed that SPAC in 11 months. And they successfully debuted it on the New York Stock Exchange back in November of 2019. And then since then, I have been doing consulting work for seed to Series A companies. And typically that trigger is they have outgrown a bookkeeper or they have some type of transaction that is coming or that has happened, right? And so you either are now revenue generating to a point where you have outgrown that bookkeeper. You may have raised a seed or Series A round and you now have the investors, right? Board decks to get ready. And you need a strong resource in the accounting department to help you pull the GAAP financials together in the reporting components. And then I do a lot of mentoring. I mentor for Seed Spot, which is a social impact accelerator program in the DC area, Lighthouse Labs, which is out of Richmond, Venture Asheville, which is out of Asheville, North Carolina, and primarily food and beverage. And then I mentor for Techstars. And so this combination of seeing hundreds and hundreds of different pitch decks on different selection committees has really allowed me to begin to kind of hone in the messaging that resonates for pre-seed to seed series companies. And with that, I am excited to introduce this all-star panel of individuals just like you, who have kind of either played in the idea stage, taken that to a pre-MVP, MVP, and then post-launch and revenue generating. And with that, Erica, please introduce yourself.
Hi, my name is Erica Cole. I'm in St. Louis, Missouri right now. I founded a company called No Limits. We are an adaptive clothing brand with the mission of increasing comfort, confidence, and independence in those who struggle with clothing due to a disability. I'm an amputee, so we have clothes for amputees. We're launching sensory and wheelchair collections in the next few months, setting up our own distribution center here in St. Louis. My history with fundraising, we just closed our seed round. It's kind of a long story because things were still changing as we were raising our round. So we raised $400,000. We got offered $1 million, but one of our investors ended up offering us a line of credit. And so we ended up, for us, it was better to retain that equity and use the line of credit. And then it was better for the investor too, because they didn't get diluted. So we had a kind of interesting seed round, and I'm excited to be here.
Real quick before, because I don't think Erica did her introduction justice, but Erica, you've also done a Kickstarter campaign in 2020 that was successful. And then you've also gone out and now raised a round from investors in VC. So as you, whatever journey you are on and you are looking to raise funding, there are different alternatives, and these founders have that experience. Hector?
Hello, everyone. Can you guys hear me okay? Wonderful. Hello, everyone. My name is Hector Ocasio. I'm the founder and CEO of Pet Connect Business. We are a digital management system for pet service providers. We make it easy for veterinarians, boarders, groomers, and trainers to implement and manage branded websites and branded mobile apps. They can implement additional functionality like online bookings, client marketing, and more. The secret sauce to our company is that they can do all of this without any coding, no developer involvement, and without any technical experience required. Our journey has been quite an interesting one. We actually started off as a marketplace company. We had built a pet-friendly marketplace in 2018, got some consumer traction there, but ultimately we could not get over the tipping point as we were trying to bring the businesses on board within the marketplace for enhanced marketplace listings. And so it was through that experience that we were able to talk to customers and learn more about their needs. And we discovered an opportunity for Pet Connect Business. And our journey from not only assistance, but raising capital started off with a social impact accelerator seed spot. It's actually where I met John. And then that was sort of the first milestone hump that allowed us to start then raising capital with different types of funds, angel investors, and even some grants. So, and I'm happy to share details about that today as well. Thank you.
Sid?
Thanks so much, John. And thank you for having me here. My name is Sid Pila. I'm the founder and CEO of Sunny Day Fund. And I will start off with an apology that I'll be speaking with you from an area that has a little bit of background noise. So please bear with me. So Sunny Day Fund, we make saving for emergencies and immediate financial goals easy, accessible, and rewarding on behalf of the employer. Think of it as a short-term, mid-term savings benefit alternative to the 401k, which over 100 million Americans do not participate in. So we're bridging a massive gap in the market, and we're creating a category-defining benefit along the way. We've been grateful to have a lot of support on the fundraising side from everything from alumni of our university to Lighthouse Labs, Startup Boost, which is now Founders Boost, as well as like folks like AWS that have just credited us like tens of thousands of dollars, which you really, if you are starting a tech business right now, you're not taking advantage of GCP, Azure, and the AWS credits, like please let me know. We'll make sure that that's happening right off the bat. We have also very recently closed a 7-figure seed round. Again, very grateful for that. We are a post MVP, product is in the market, revenue generating, and are anticipating over 20,000 lives in our platform, which is very exciting. So looking forward to getting your questions.
Thank you. Thank you guys for the introductions. I guess I kind of want to take a step back, right? Because when we think about the pitch deck, you can Google it, right? And there is any number of outlines out there that you can follow. When you're in that idea stage, right, in which you guys were not long ago, right? A year and a half ago to 2 years ago, quite honestly, right? How did you position that idea in your pitch deck to begin getting some traction and being able to get some interest level to get to at least move it forward to the next step? Hector?
Yeah, so that's a very good question because I'll be the first one to admit that we did a lot of we did a lot of pitching that got us nowhere, and it took a lot of iterations of the pitch deck to find that secret spot where I finally generated interest. One of the things that helped me was there was a presentation that I participated in where a successful founder who had a previous exit was presenting at SeedSpot, and when his presentation wasn't really around the pitch deck, it was really about the story of how you share with investors. And one of the things that he shared with us was that investors don't care about your solution, that they really are more interested in the problem, the size of the problem, especially at the stage that we're at. That they're more interested in the problem, and you must show them that the problem is big enough to even generate their interest. And then once you have their interest there, all the sort of remaining components of the deck are supporting why your company is in a position to solve that problem. And I think that in early new founders, early entrepreneurs tend to focus a lot on the solution. And we put a lot of emphasis about, look at this wonderful thing that we have built or that we are building and why you should invest in it. And it just took a little while for my team to figure out that we were spending a whole lot of time on the least interesting slide in the deck, if that makes sense.
Sid, as you've kind of gone through your journey over the last year, really, and just I met Sid through Lighthouse Labs about a year ago. He went through that cohort, and even since then, your messaging has changed. Can you tell a little bit about kind of, you got into Lighthouse? It was a idea stage. You had pre-MVP, I believe, at that time.
Yeah, we were just working on the product at the time. I think we had figured out what solution we wanted to create, but then as Hector alluded to, it was more about the messaging of what that solution is in the marketplace that mattered more.
How was that messaging adjusted before you had that MVP to getting ready to launch that MVP? How did you resonate with investors in the beginning when you didn't have anything in hand, really? And then how did it change once you did have that MVP ready to go out and deploy?
Yeah, that's a great question. So in our case, we have been focused on a singular fact that should scare all of us, which is that a majority of Americans wouldn't be able to handle an unexpected emergency. And that is fundamentally a consumer side problem. That's not to say it's society's problem, it just is, from an investor standpoint, a consumer side problem. But at the end of the day, our product was focused around employers, our customer was an employer. So we needed to understand how this became a value proposition to the employer and why it was a fundamentally large problem to solve for the employer. So here's what happened over the course of the last year. We went from a bunch of people not having access to benefits, people not having access to jobs, to basically over the course of the year, having the Great Resignation come about, a lot of people leaving the workforce, and all of a sudden employers increasing their salaries for their employees over 10, 20% over the course of just that year, right? It became way more valuable for employers to focus on retention. So once we started changing our messaging about what if you created and offered a benefit that was way higher priority for your employees, would that increase retentive behavior? And our initial data started showing, yes, 90% of participants in our benefit ended up sticking around with their employer through the Great Resignation. And so we stopped focusing less, not at all, stopped focusing less on kind of the inherent social missions that's driving us, and started focusing more on specifically articulating the problem that we're solving for our customer. And that was incredibly helpful in finding a footing in the market.
It almost sounds as if the problem, the struggle, that pain point, right, is so big and has so many different avenues that you can go. It's really finding that one message that begins to open up that umbrella so that it becomes inspirational, right? Your solution is inspirational. It is solving problems and it is saving the world, right? And you're doing it one savings account at a time.
Yeah, that's exactly right. And also going back to Hector's point as well as your point, John, investors, especially institutional investors, VCs, what I found is they're focused on, yes, solving large problems and in incredibly large marketplaces, because even if your solution is there for the first 1 year or 2 years, they're going to assume that it's going to get saturated. And is it a large enough market for you to capture and grow rapidly over time that it creates a 3x to 10x return? And fundamentally, they're investing in the size of that market, and having a social tie in there is just as important.
Erica, you're a little bit different in a sense that you are an amputee and you're building clothes for amputees, and so you inherently have the problem, right? You understand the exact pain points that are going through. Can you tell me a little bit about how your experience helped you solve the problem?
Yeah, I mean, while it helped solve the problem and come up with the idea, actually in the pitching process, I don't think it really helped me, because investors were seeing such an emotional tie to my company that it turned out being almost, oh, you're solving this problem for yourself. So we did 300 customer discovery interviews before even starting a product. I was on a sewing machine for a year before going out and fundraising. And so then I had to learn through this process to take myself out of it, and put in data and numbers and rely very heavily. So I actually, internally, we have this social impact mission. We are changing the world, everything that you're talking about. But my experience was that I had to take that out of my pitches and lead with how are you going to make money, and kind of what Sid was saying, lead with those market sizes and what is the problem, and show that this is a financial decision. It's not just like a goodwill type of thing. So I know that this isn't a social impact kind of session. So I just wanted to share that sometimes you have to take that out of it for certain investors, and that's okay. But then also you want to make sure that your investors are aligning with you also. So there's a balance there. Yeah.
But it sounds like you still, even though you are living that problem, right? You still went out 300 different individuals, right? To get some validation, right? To kind of remove yourself from that equation and make sure that you're serving the customers and what they really need. And that's a time consuming process. Did you find that you pivoted did it reinforce your understanding of what that problem was and what you were solving? Or did you come to understand there's a different avenue that you should probably take?
Yeah, no, in my experience, it was because I was like, we're just going to do pants for amputees. It's going to be this little thing. And at the time, to be honest, I was like, it's going to be a small Etsy on the side of my regular full-time job. And then found through customer discovery that it was actually, and customer discovery in combination with our MVP, which was me on a sewing machine, is a much bigger problem than I originally thought. And then we had a ton of people across a wide range of physical challenges reaching out to us and asking if we can make clothing for them too. So then going through that process, the vision just kept getting larger and larger until it was a startup, until it was, something bigger than we originally thought. So that was our experience with it.
Yeah, because you've gone from essentially a clothing line, jean line, right? You were going to do primarily jeans, and now have morphed it into a century collection line that's getting ready to launch. And it's now, for wheelchairs, and it really expanded as you've kind of gone through this year process, right? Of tackling the problem, solving that solution, and then going out and creating it. And it's just been, you're getting ready to launch on QVC, right? Here shortly. And so you're getting a lot of good traction and momentum begets momentum. And I think you're always continuing to kind of reiterate that product description and the solution to fit that. Sid, I'd like to talk a little bit about kind of the team, and in your pitch deck, how the team helps open up doors and de-risk the business for angels and VCs.
Yeah, that's a great question. Team is a huge part of what people are investing in beyond the problem in the market, of course. And in our case, I am a solo founder, and I'd spent a lot of time trying to identify a co-founder to join our team very, very early on. John, I know we've had conversations about that when we were at Lighthouse Labs, for example. And for me, what I wanted to showcase to investors is, look, this is something that is not a kind of a pet project of mine. This is something that I've intentionally set aside money for. It is a business and a life that I'm going to be approaching. I've de-risked my personal finances to make sure that I'll be able to go about doing this. And that was a 7-year-long trajectory. So starting with the team was really showcasing what I've done along the way. Beyond that, what they found comfort in was that I was a technical founder, that I have a background in systems engineering and as well as business. And then I needed to make sure that I had the ability to execute. So being able to bring on folks that were engineers that were actually doing the work, because I was on the business side of things. Now, not until actually earlier this year and after a pre-seed round did we actually start bringing on salespeople. But one of the other ways that we de-risked along the way was bringing on advisors that were incredibly close to the market. So someone that knows this specific industry, like a leader at Ceridian, a leader over at SAP, people that actually understand financial services and benefits, and being able to have them on our advisory board and eventually become investors themselves became a vote of support. And that's what caused us to create momentum. So for us, the team itself was primarily de-risked through me, but I was able to de-risk further by bringing on additional advisors that ended up becoming investors as they followed our entrepreneurial journey.
And how did you secure those advisors?
Yeah, that's a great question too.
It's hard, isn't it?
Persistence is one.
Yeah.
I think that, and we talked about this too, this concept of being, as you had with Entrepreneur Diaries, just being open and vulnerable about your journey and just being able to like, look, not only am I doing this, like I know, and I'm going to do this for another year or 2 years, whatever level of self-commitment you're making, but also I'm going to share with you the progress. And I'm going to be as transparent as I can be without sharing customer side detail with you about that progress. And if I can show you that I am making progress across problem validation, value proposition validation, willingness to pay, product actually working, will you then do this incremental thing for me? So I started getting micro buy-ins from advisors saying like, look, maybe it's just like you and I touching base once a month, and then that we can formalize that if you think that I'm becoming more and more legitimate. And if you like what we're doing, then we can formalize that further through investment. So I didn't ask for them to invest right away, and I didn't ask for them to become advisors right away. I basically was like, hey, can you give me advice and maybe become an advisor over time?
I love that kind of progress, right? Hector, you've gone through a lot of business model iterations, traction. How do you, over kind of just from kind of the idea stage to the seed stage, just shown that traction, that progress, and kind of the milestones when you really have nothing, right? When you're kind of idea stage and you're just starting to build that MVP, how did you show that traction?
So the very first thing that we did is we tried to identify what were going to be the metrics that we were going to target so that we could tell a better story, right? And so both Sid and Erica kind of touched on something that I think is true, is they found a way to shape a story that showed the progress that they were achieving. And that's the key to a pitch. A lot of people, myself included, drop massive amount of hours trying to figure out what pictures and what text to have on a pitch deck. And ultimately, what I learned is you should be able to pitch your entire business without a deck, right? You should be able to just stand in front of somebody, tell them your journey, tell them what you're solving, how you're solving it, and here is examples of why what I'm sharing with you is correct. And then the pitch deck just becomes a reflection of that story. So when we first launched, as I shared, we were a marketplace solution, and we had traction, and I would go pitch the traction. But what I realize now is that when I went to go pitch that traction, the problem wasn't big enough, right? And so I was sitting there headbutting the wall, trying to figure out why I couldn't generate interest. And it took me a while to figure out that the problem was too small. And the customers were ultimately telling us what to go build. And so when we started listening to the customers, they helped take us down a journey of, okay, this is what you have to build. This is when we got into the first accelerator to go put a model around what we were building. We built it, and then all of a sudden, the second accelerator, TEDCO, jumped on board because they saw what we had built and said, yes, we want to fund that. And it was through their capital and through their mentorship that we were able to then take that and now acquire customers. And now we went from essentially having an idea, having struggles with that idea, to now getting paying happy customers because we sort of took that journey along the way with all the different accelerators and mentors that helped us with each stage.
I think that's an incredibly important point, right? And I think that's the one feedback I hear a lot from founders is, what traction do I have, right? I have just an idea, or I don't even have having an MVP yet. And remember, and you continue to hear the theme of the story, right? This is your startup story that you are telling in this pitch deck, and the ability for you to just simply say, I am at this stage and this is what I am solving for, and I am going to be able to deliver X and X with these resources in this amount of time, and then go out and execute. Right? If you are pre-MVP and you need to go out and build that first beta, right? Walk through that investor through what that beta is going to do, right? And then show them we've gotten through the first stage of building this MVP, and we did it on $10,000, right? The next stage is going to be delivered in 6 weeks, and it's going to include this functionality, and I'm going to be able to do it with these resources. Right, that is the deliverables and tractions that you just need to show especially at an early stage. And I think that often gets overlooked because everybody needs to think they have to have these huge metrics, right, in order to be able to get attention. And you just need to be able to show that you're continuing to execute against what you are looking to deliver. And that's critically important. Can you tell me a little bit about, Erica, maybe the secret sauce, right, of what your business model brings, right? Everybody has a competitor slide, but kind of how do you differentiate yourself in your pitch deck?
Yeah, a lot of ways, actually. It's a combination of, you want to show that they call it a moat, whether it be IP or brand, or maybe it's a super difficult space to enter. So I always make sure I talk about kind of competitive advantages and IP around that time. And then secret sauce is, like, for us, kind of the market that we're serving, the way we're going about it. So I can just kind of drill into, for us, we're focused on the adult space. So you'll see a lot of adaptive clothing in kids, or you'll see a lot of adaptive clothing in the senior space. And that's because it's easier to design for a caretaker instead of an end user. So we're designing for the end user, the person with the physical challenge, instead of the person taking care of them. And then we believe that can increase independence, but also increase financial return. So again, for us, it was a lot of like weaving that social impact story into the financial story and how they all tie together. Yeah, does that answer your? So we didn't do I've seen it done some ways in this like chart with little check boxes. And then, it's it's your pitch deck, so you get all the checks, right? Is what I've heard. That didn't work as well for us. I tend to take a more conversational tone in my pitch decks, and just having kind of a list of the competitors, and then like a, hey, to be totally upfront, this is why we're different than them, ended up working a lot better for us than the little box with the check boxes. Because I think people tend to kind of, unless you have a super technical product, glaze over, because they know you're going to get all the check boxes.
Yeah, or it's usually the 2x2 quadrant, right? And you're always in there, but there's always, everybody has competitors, right? Hector, how do you differentiate your product against your competitors, especially once you are going out and looking for funding to scale, essentially, right? The repeatability of your business model.
That's a very good question. And for the, sort of the new entrepreneurs out in the market, what John is really telling you is that you must study your market. You have to really not only understand the competitive landscape, but you have to also understand how the competitors are pitching their story to the competitive landscape, meaning that what is the value proposition that they're showcasing. One of the things that we did is when we studied the market is we realized, and by the way, this was through help of advisors from the accelerators that we had joined. We were able to realize that there was a saturation of the market in point to sale technology, so operator efficiency solutions in the market, but there was not a lot of client engagement systems in the market. And so as we were building out our solutions and we started making decisions on features, sometimes the customers would ask us for operator efficiency functionality. And when we were doing an apples to apples comparison, we would always lean towards the client engagement side because that was helping us build out a solution that was different than everybody else. And instead of putting ourselves to compete in an ocean, we were essentially building out a solution that allowed us to dominate a pond. And so as we got from idea stage to stage now, there are functions that we have in our solution where we're the only technology company in the world that has that today. So it really gives us a clear advantage to be able to go to tell a story to our customer base now, because we built out something different than the entire competitive landscape.
Sid, if you could tell maybe a little bit about how your product in the KPIs and metrics that you have used as you have gone out and raised different rounds has evolved, if you will, because you've launched, right? So you've got revenue, you've got users, you've got a number of different enterprises and companies that are on board. Can you kind of tell us in the beginning what metrics, KPIs you were using, and then now that you're fully launched and going out and raising a six-figure seed round, kind of how that data metrics and the expectation around your business model and your understanding of that has evolved as you continue to pitch this?
Yeah, absolutely. So, when we were first starting, it was very much about focusing around the education of the market. So, initially, like when we were getting the advisor level stuff, right, it was more so about, is this even a market? So how many employers were even looking for a solution like this? What type of problems were happening within the 401k? Like we started citing stats around, look, 20 to 30% of 401ks have hardship loans and hardship withdrawals. That is very much a lagging indicator of this problem existing and so on. From there, the next step, as we were about to raise our pre-seed, ended up becoming a lot more about how many employers specifically want Sunny Day Fund? Like how many LOIs do we have and so on? Unfortunately, that ended up being right around, March of 2020. And I heard something happen back then. I'm not sure if you can tell it's still happening. But we needed to change things overnight because we went from right about to launch to, okay, how do we launch in a market where fundamentally our customer does not have the capacity to roll out a new program because they're dealing with something completely else. So for us, then we needed to not necessarily pivot, but needed to start building up a broader market side story. And we said, look, the COVID is exactly why employees need, a sunny day fund or rainy day fund and be able to overcome those type of crises. And so that we started measuring that. Then we started having our initial beta and rollout. And that's when we started getting, okay, the KPIs of this actually being an effective, and in some cases more effective solution than a 401k. So it started from like intent to actual usage, and us showing the storyline of that as it evolved actually also ended up giving us the opportunity to showcase ourselves as a thought leader. And that's and now like the type of things that we're showcasing are how many people are going to be on our platform, what are enrollment rates like, all like much more granular KPI data about like how successful a solution is it, as opposed to is there even a market for this. So as we continue to differentiate ourselves further, like one of the ways that we've been doing it is just be better than the competition. So whereas everyone else is coming in at like half of our enrollment rates, like it's easy for us to just point to that now in terms of defending ourselves and say, look, there's a reason that we're getting the media coverage that we are. This is because we have twice enrollment rates. We have satisfied customers and consumers, and we have actual case studies that are coming out of this. So as we go to the next step, now becomes a lot more about the next evolution of what we're doing is going to be all about how effective is our sales engine. So we have figured out like the actual solution aspect of it, but how do we make sure that we have a replicable sales engine? So now the types of metrics that we're reporting out on are, okay, if our sales development representative is making a call, how many of those is turning into discoveries? How many of those are turning to demos and so on? So that's going to be our next stage. But yeah, like summarizing, started with intent, going into effectiveness, and now scalability.
What you're hearing from each of these panelists as they kind of walk through their journey is at different stages, you're highlighting different aspects of your business, right? When you are idea stage, you are selling the vision, right? You are selling the solution to this problem that is enormous, right? And that is the impact that you're having. And then you can see as, especially Sid, as he's gone through and he now has onboarded customers, he's got revenue, he's going out and raising a 6-figure seed round. He is now beginning to take what was that problem, created that solution, but now putting scalability, right, and repeatability into his business model that he can then go out and champion. And that's really kind of, regardless of what stage you are at, you need to tailor that pitch deck to that investor, that stage that you are truly at, right? If you go out and just duplicate Sid's, what Sid is saying right now in terms of metrics and KPIs and retention rates of the individuals that come onto his plan, you probably don't have that data. But if you can go back and just highlight the milestones and deliverables that you've done and show that you're de-risking the business and you continually are looking to put some repeatability in that business, that will help you get to the next stage of funding, right? I think, Hector, we probably talked maybe a week ago, 2 weeks ago, right? And we were looking at your business model, right? Because you were getting ready to go out in front of an investor. We spent a couple hours doing that. And then I got a call back from you. And I thought this summed it up great, right? And you were like, and I was like, how'd it go? And you're like, man, it was great. We moved it forward, right? The pitch deck is just to get you to the next step. Right? It's just to keep you moving forward. And that traction is all you need, right? It's just for this moment in time to say, here we are. And I thought that was great. It kind of switched something in me. And I said, oh, that's perfect, right? It's just, you want to talk a little bit about that?
Yeah, there's two components to that I think are important for everybody to understand. One is that nobody gets a check right after the pitch, right? Yeah. It just doesn't work that way. And the concept of the pitch needing to close the deal, I think sometimes can be frustrating for people because they're not understanding why they're not closing something immediately after that initial pitch. And that's not its goal. The goal is to be able to tell a story, to generate interest and get to the next meeting. When you're getting a check written, you're getting a check written because you're now in a meeting where they can ask deeper dive details without your pitch deck. They're learning more about you. They're learning more about your team. That's where you can actually start selling the solution more as well, because you sort of already showed the problem. The other part that I think is critically important that you shared, John, and I would bet that Erica and Sid would agree with this, and that is you must understand where your company lies in the investment cycle, right? Are you pre-seed? Are you seed? Are you early stage? Are you Series A, right? Like there's a lot of mistakes that early entrepreneurs can make where they go pitch to early stage venture capitalists because they see early stage on the website and they think, well, I'm early in the process, so that must mean me. And that an early stage for that company could be they need to see $1 million in revenue, right? And you're now wasting time chasing investors who are not even going to give you the time of day. So, for our journey, was understanding how to build a story. One was how to show the data to support the story. Do we have like clear evidence that the story that we were pitching is working? And then asking to get to the next step and understanding what that next step is. And so for us at the stage that we're at, we understood that it wasn't about, getting $1 million check. It was, could I get this this next meeting to show you why this small amount of revenue, or excuse me, amount of capital was going to allow us to achieve this next set of milestones.
We're coming up, we've got about 15 minutes left in this segment. I want to spend about 10 minutes, the remaining 10 minutes, to open up for question and answers from the audience. But for this next 5 minutes, kind of at the end, right? There's always a call to action on a pitch deck. Can you tell me a little bit about that call to action and how that call of action has changed from, again, idea stage, pre-MVP to MVP? Erica?
Yeah, so my last slide is usually about kind of the round, what we're seeking to raise. And we started with putting in use of funds there. And then that wasn't really telling the story. I was like, we're going to hire this person, this person, this person. We're going to get this amount of inventory. But that wasn't what that really meant. Those were the granular steps. But now I say, like when we closed the round, we were saying, okay, these are the things that we're going to do. But this is why we're doing that. And for us, it was like, this represents market leadership positioning in this space. This is what we're going to do within this round. And then that's kind of how I ended it. And then before you end the meeting, like always keep an eye on the clock. If you scheduled 40 minutes, 3 minutes before, stop and say, okay, let's put the next meeting on the calendar. Or sometimes you just want to get to that no, because sometimes like it's just, you're going to waste your time going through a bunch of meetings for them to say no. So getting a no is just as valuable because you're not going to waste any more time. So don't be afraid of that. I wanted to mention that also, but put the next meeting on the calendar before you end. It just makes it easier for everybody and keeps the process moving. And then ask them also, who else should I be meeting with is another very valuable question to ask at the end of the meeting. Some of the best investor calls didn't end up investing, but they introduced me to incredible people who helped me in this space, customers and all of that. And then, yeah, that's kind of what my list of steps for call to actions are too.
Sid, part of, I think sometimes that's overlooked, right, with the pitch deck and that call to action is everybody thinks that call to action is the fundraise, right? I'm looking for 400,000 for my seed round. A lot of times that ask is, will you be my lead investor? Can you tell me, is having a lead investor when you're going through that seed round, does that open up doors for you in the sense of bringing the ability to bring in other investors quickly, or did you already have 6 or 7 investors out there and you just pull it all together and a lead? How did you find a lead investor? So you're mute.
All right. Can you hear me now?
Mhm.
Okay, perfect. Thank you. Sorry about that. Needed to transfer devices as batteries also seems to be important in this modern day age. So absolutely echo what Eric was just saying. And then in terms of your specific question about lead investors, John, in the case of our pre-seed round, we did not focus on having a lead investor. We said it was a bunch of angels that came together, and then we ended up converting an institutional investor at the end, saying like, look, we already have all the money. Do you want to join this journey or not? So for the pre-seed level, we did not focus on having a lead investor. In fact, the advice that I've gotten from everyone else is to have enough money coming in before you start asking the lead investor to be a lead investor. Because the thing is, you don't want them to, like, you want to make sure that you're doing your due diligence on them, because they're going to be a long-term partner. Someone at the seed round level is going to be taking 10, 15, potentially up to 20% of equity. That is a significant chunk of change. But so being able to be on the same page with them is very, very important. So we ended up making sure that we had about 50% of the round already filled up, and then going over to the lead investor to have them come in. And then our lead investor, specifically in our seed round, ended up pushing us to say, hey, you should go raise way more money. And by the way, here are the people that you should go and talk to. Some of them ended up investing, some of them did not, but it became a lot easier after that point. So just wanted to make sure that strategy was there. Like, do not focus, start building a relationship with that lead investor, but remember that if they are truly a lead investor, you probably get one or two shots with them to convince them to go to the due diligence phase. So if you're not ready, they'll just say that you're not ready, and we'll pass on you.
And that, that's a great point too, right? Because sometimes they will pass on you, right? You're not at that right stage. Again, we keep mentioning the pitch deck is just a moment in time. It's to get you to the next meeting, right? And one way to take that pitch deck and extend that relationship with that investor is to continually send out monthly or quarterly updates on your progress as a business. Everybody's shaking their heads. Hector, Sid, I get Sid's monthly update, and it is spot on, right? Like, it is a great wrap up and summary of what he has delivered every month. Hector's is amazing. Erica's is great. Can you share me a little bit about that follow-up communication to investors? Because they may not bite the first time, right? They may say you're too small for us, or come back when you have a little bit of more traction. Can you talk a little bit about that follow-up communication? Hector?
Sure. Yeah. The reason why it's critically important is we've gotten essentially leads into two investors through those follow-up sessions, and not lead investors, excuse me, two additional investors through those follow-up sessions. Even what's interesting is one of them sent me forward to another investor and has not invested themselves, and yet I was able to get money from the follow-up investor because of my just follow-up, sharing progress, keeping them updated on what we're doing. The key factor for us is, because we were so early, it was always like, we took this money and this is what we did with it, and then we took a little bit more money and then this is what we did with it. And so that way they can sort of see your journey and understand, okay, if I give you $100,000, this is what you're going to be able to achieve with that, and you have a proven track record. So you haven't de-risked it, but you certainly make them feel a lot more comfortable in the investment, right? And so that's what our newsletter is about, is just the incremental success that we've had as we've achieved either capital or sales.
Great. We've got about 7 minutes left. Adele, you want to take some questions from the audience?
Absolutely. We have a couple of questions, and please keep them coming and we'll address them. So let me see here. I think the first one that came to my attention was Nina. She was wondering if you all could share like samples of pitch decks. So John, I know you've worked with a lot of startups and also to the panels, if you're comfortable sharing with that, would it be possible to share your contact information and they can reach out just to see what that looks like. I too, I'm a very visual person and appreciate that. We had a question from Diva regarding the market size in the pitch deck, and she was wondering, should you focus on like the number of customers, or potential customers, or is it the dollar value?
Who'd like to take that
Or
question?
both?
Everybody?
I can, yeah. I mean, the cop-out answer is it depends on your market, but if I could share my screen real quick, I'm going to show you this slide that I don't put in the pitch deck, but whenever anybody asks like, how big can this get? What can you give me more details on your market sizing? It's a common question that I get in particular. This format really changed the conversation around market sizing and showed that it's a big enough market to invest in. So then the total number, kind of these bottoms up calculations multiplied by average cart size in the space is the initial total addressable market. And then based on our interviews and our actual sales, this is the percent serviceable to lead to your serviceable addressable market. So in this way, we show all of those numbers. And it just shows that you're being thorough in the way that you're thinking about the market and you really understand it. So this is a little bit detailed for like a pitch deck, but when you get into those deeper discussions, having this I always go to it and it makes people feel a lot better.
See, that goes right exactly to what we were talking about before. So Erica's previous meeting, the pitch, is to get to the second meeting so that she can present that level of detail in the next meeting, right? And so she saves that nugget for the next meeting, and then that really shows like, wow, this is a massive opportunity, and now that makes her more fundable.
Perfect. Another question that came in your pitch decks, do you also include projected ROR or how many equity you're willing to negotiate?
Sid, when your recent seed round, did you put how much equity?
Okay, sorry, just having issues with unmuting myself here, sorry. We did not put in equity in the pitch deck, and I've learned from other fundraisers as well to not put in equity. It's just a negotiations technique, and also, at the end of the day, make sure to read a negotiations book because you don't want to give away too much of the farm at that, right? Like, especially if you're a solo founder, that chances are you're going to be bringing on more team members, and that's going to be very key to the other people that you're going to like who else you're going to be giving the equity away to other than just investors. In terms of rate of return, what we do instead is focus on comparables. Here are comparable companies that have worked in this space that have raised at this level, at this valuation. So we show comparables, and that at the end of the day is what investors are focused on. It's like momentum. Depending on where you're raising, people may use like a discounted cash flow type model or a comparable model, but for most like New York, San Francisco, Austin, Miami, those type of areas where you're raising, they're solely focused on comparables.
We have a couple more questions. Bear with me here. We have a question from Russell. Is it best to have a wireframe design for an app before going to investors with a pitch deck?
Can you tell the story without it? Would be my question back to you. So you have to be able to tell your story, and your visual your deck is essentially just a supporting of your story. I would focus less on the slide, like the way the slides look, and make sure you focus on the story first. And then if you think that the wireframe or just design overall can help you better tell that story, then the answer would be yes. But Again, it's all about your story.
Perfect. And we have another question around what's the best pitch deck framework you've ever seen? And I don't know if they mean the structure of the pitch deck.
I like
Oh,
the,
go ahead.
oh, I was gonna say, I use the Sequoia Capital. If you just Google it, it'll come up. And the reason I like it is because it has a why now slide, which is something that we didn't talk about, but it's not super commonly used in pitch decks, but it's a slide that provides space for you to talk about what's happening in the marketplace, that makes the timing right for your company. Because as much as it is team and product and problem and solution, like the timing, look at Google Glass, like super cool technology, not the right timing. It gives you space to talk about why now is the right time for your business. And it's changed the tone of some conversations for us.
So I think this is a great question. We're actually going to share my screen because I think this is vastly important, right? And I want to kind of, as we think about the pitch deck, right, and how to tell your story, right? You're going to go out and Google this, and you're going to get the outline for what a pitch deck is. And this is really kind of that secret sauce that we're all talking about. And this is kind of a nice summary, I think, and very relevant and timely. Right? Everybody's going to tell you problem, solution, market size, business model, competition, your founding team, traction, and then the fundraising, right? And you're going to go in and you're going to drop these slides in. When you're pulling your pitch deck together, regardless of what stage you are at, right? Think about telling your story, right? Hector has mentioned it several times. Sid's mentioned it, right? Erica is following her story, right? And you kind of take those bullet point pitch slides and you begin to narrate what's actually happening within your founder journey, right? And so the common problem, right? The struggle, the pain point. Ideally, you experience this struggle and this pain point, right? Erica's a great example of that, right? The target customer, niche down into who you really are targeting and show how they are affected by this pain point. And then the opportunity, right? This is the market size, the TAM that everybody talks about, but talk about how it's enormous. It's insurmountable, right? This is the hero's journey that you are on and that you are a savior with your product and your solution, right? That solution could be your team. It's your business model and it's the product that you're offering that is going to help alleviate those pain points. Talk about the secret sauce that you have, right? Everybody should have 3 key features on that pitch deck, right? It's you versus a competition. Erica talked about it. It's either the check marks going down the side or it's the 2x2, right? But at the end of the day, you have to have 3 key features. One of those has to be unique, right? There has to be at least one differentiator from your competitors, from your own unique experience, right? That gave you that aha moment. And then on your pitch deck, show that your solution works, regardless of what stage you are. Show the milestones that you've hit, the deliverables, and how you hit those deliverables on time, on budget, and on point, right? If you have paying users, beta users, right? Testing users, talk about that and say, I have created this product, I have beta testers, and the next stage is we're going to go out and use the funds to scale into paying customers, right? And that's the key in terms of the next stage as you move along is knowing your numbers, right? And Hector alluded to it, is how you're going to scale this, right? The ROI and all of those types of financial, I saw a question like, how do you project financials, right? You project financials by doing your unit economics, right? Sid can right now probably rattle off the exact number that a average customer comes in and saves on any given basis. And then he talked about it, the impact that has on the employer retention, right? He's beginning to show that if I take a business development rep, or if I take $50,000 of digital marketing spend, I know that my customer acquisition cost is going to be X and it's going to give me a lifetime value of X, right? That is the scalability, the repeatability that Sid is now putting into his business that is fundable at a seed stage. And then the call to action, right? Hey, come on this journey, guys. This journey that I am on is going to be huge. It is going to alleviate so many pain points across the world. And all I need you to do, Mr. Investor, is come on this journey with me and help fund me. That's the pitch deck in a hero's journey that takes kind of the bullet points, the outline model, and puts it that is unique to you and allows you to go out and sell your business.